Good afternoon, guys. Welcome back to another stream. And today we've got two bits of execution, one from our Elite Trader and one from me on one day of each of the OPEC meeting that we had last week. And sort of the big theme about it and the delay and all these different things of building narrative, and this is sort of how we went through it. And I want to go through to begin with the commentary that you got. So I've just basically got the headlines, and then I'll talk about the story from the top to the bottom and where the bigger points were, where to take the lessons from, and the execution of both. And I've got the charts of the reactions and how we, I can improve towards the end, and we talk about different ways and leaning into a bit of like technical play as well on my one more specifically. But I'll just get straight into this, and I'm sure you guys know sort of what the outcome was in the end. But coming on to the Thursday, so you had the Thursday, and the most sort of important thing was what was going to happen. You had to talk about an increase, and you didn't know how much you were going to get. The last time we got, they were going to extend to April 2022. So that was your sort of base case. Does anyone want to work? Only wants to work in certain places. So what you basically got was April 2022 is when this deal ends and when it runs till. And basically what happened was, your first comment that came out was they've reached a preliminary deal. So really, there's a possible deal happening here. You don't know what the aspects are, and then you get 2 minutes later, you've got, include monthly output increases of less than zero. Oh, come on. Less than zero. So here we go, so 0.5. It doesn't really want to work today. What is going on? Right, so you got 0.5, so you got increases of less than 0.5 per month until December 2021. So till the end of the year, I think that works out 2 million. That works out 2 million in the end, which later on in the end of the day you get 0.4 to December. So it become like a dovish scenario really. And my problem is with my Reuters, I didn't highlight this 0.5. So that was the problem, and I didn't react on this first one because I had 500, 600, 700, 550. I didn't put the 0.5, which you always need to factor in. The same with your central banks. They can put it in all different types of language, and it's just better to have it all. So that was the first initiative, which we go through with the Elite Trader, with how we executed on that one. And then, likely to ease output around 2 million. So that was your first scenario, and I didn't feel like at this point I've missed out on a massive thing, because it's not really, it's just like a dovish play. And I felt like you could have got much more after this. You could have got people backing off and saying that they want to increase more and this and that. Really, you didn't actually get anything towards it at all. And then coming down a bit lower, meeting starts at 20 to 1. And again, likely the debate carries on talking. They end the meeting ahead of OPEC Plus talks. The JMMC proposed the same deal to extend it until the end of... So this is when it changed. Then they wanted to extend it to the end of 2022, where the Saudis as well, they don't really want to increase any production at all next year because they think the market will be there. So this then becomes even, more dovish to the scenario, because they want to do... Because the deal was supposed to run out in April 2022, remember? So you had April 2022. And then they want to extend that until the end of 2022. So once it runs to April, it ends. So they wanted to carry on for much longer, and then they're proposing until December, but could possibly until next year. So later on in the evening, which we all stayed for, so then they delay the meeting here until Friday. So we were like, okay, they've extended another day. You know, obviously there's some conflicting issues. And obviously during this time you had the UAE, the baseline for oil production cuts, right? So what happened is they wanted, the baseline was the 400k, which we've got up here, but then the UAE come out and they want more in the end. Yeah, so they've got delays due to the UAE's reservations about extension of the deal, right? So then you're coming into, again, some more of the evening. OPEC meeting starts. UAE asked to postpone discussion, extending the output beyond expiry. They don't want to do that. So this is all hold up because of the one country. Yeah. So they were happy to do the from August to September, but they didn't want to extend it further. Well, yeah, I think that's what it ended up coming across along the lines. They were happy with the deal, but they don't want to extend beyond April, and that they wanted to increase a little bit more because they're capped at 3.2. They wanted to be going to 3.8 because they've had to be capped so much during this time because of the COVID and everything like that. They've not been able to increase any production while other countries have been coming back and increasing. So this is where they have, let's say, the hump about it all. And then talks end at 9 o'clock. They're not going to meet until Monday. So there's some causing issues going on at this point. So your scenarios are just changing throughout this. And you have to just keep adapting to, okay, what's next? So you can have OPEC falling apart. They walk away, price war, or then they go, okay, we come back, and then they agree something new. All these different scenarios you're trying to picture in your head. And then, so this is then the Monday. So it's scheduled to start at 1 o'clock, so 2 o'clock, well, British summertime. And what you get was the OPEC meeting postponed, no new date yet. So this is where, this is where the trade ended up being, is that the OPEC meeting postponed, there's no new date. And it did take a while for this to come across. You know, you'll see on my ladders where it actually comes out here at 16:47, and I don't execute until I think 18 something, because the first reaction you got again was actually went to the downside. And what you've got to think of in this scenario is this is about then the production. There's no, the meeting's been basically postponed, it's cancelled. They've called it off. The date of the next meeting is not to be decided, which is even adding on even more, because yes, they're meeting once a month, but there's going to be no increase in production. So you've got to think that, okay, well, there's no increased production, and you know the demand's getting high. They're lacking the supply, so therefore the market can take it up. I think the reason it goes down and then goes straight back up, and then goes straight back up, is because the fear of everything here falling apart. Everyone thinks, falling apart because it's postponed. You know, OPEC, someone's going to leave, but you haven't got that talk yet. It's just been cancelled. They could have come back in the next 3 or 4 days, but they haven't. So that was where the main trade was in the afternoon, and then you got that oil rally, etc. They need more time to discuss, blah, blah, blah. Yeah, their position remains unchanged. So they want to increase their production because they're capped. So these are the two, I'll show you the two reactions, and then we get into the ladders. And this was the first reaction, because what you got was that initial headline of the 0.5, output increases. So this comes out at 25. So you got the 25 in here, and then you get that reverse where people know some of the information, of course. You get the blip down on the increase, but then because it's not enough, you get that push back up. And, you know, you could have been buying somewhere in here. So you can get some good risk reward, and then you get a move up, and then it just grinds. Then it just does a little grind back up. These pens aren't working at all. Come on. Yeah, then you just get a grind back up. And to be honest, you get the same reaction in the next one, really. You got the offer here, when, again, this is more of the fear of, collapse. But it's not, because there's more demand and less oil to do that. The oil's not there then to take that demand on. So therefore, price will go higher. And then that's where you get the trade back through. And you could have been, if you're buying off possibly that headline, I think I literally bought somewhere down here, or you could have actually literally bought right at the bottom. Then, you get that great risk reward, but it's the fact of, the demand, etc. And the market's just taking it the wrong way, which again benefits you by price. And so they're the reactions that you got. You get that grind back up. I tried to play this move back up here, which I managed to, start to try and just play a little flag. I mean, very simple, just trying to carry on the day. Because you feel like there's a chance this can really go higher because there's no meeting coming across. So I know you got like nearly 100 ticks out of it. Whereas, it's just one of those sort of things where just trying to play a little bit of continuation, and you feel like the move should really be coming a bit further. Okay, it's a bank holiday as well, so we're all in for this because there's, again, it shows that there was a great opportunity there. And this is really where technically this is why I held for, I tried to hold a good half of my trade, half of my size all the way up, was you had all of these levels. This was your next one to take out right below, and then you had 3 up here. And I was literally just trying to hold from, I know it's a bit ambitious, but really hold to those highs. I mean, we weren't far off at this point. We took this high, and I felt like there was a bit more to it. And technically, this is just going into an hourly, so what you got here, your support is in here. This is your range, shall we say. And you just break out that range. You just break out the range. I mean, I suppose reasonable target is here and above. When you're buying, literally, you're buying here. So there's a good amount of ticks to be rewarded in that aspect. But technically, that's what I was trying to look for. You've got technical structure, and I think where I need to still do better, because I could have committed, as you'll see, a little bit more size to this, and it's good improvement for me for doing the size I've done and doing quite good on these comments and understanding news now. But there's an element of, okay, now this is really big, you can go big. Because I was quite quick, you could have got in big size very quickly, and I never needed to have added in further on. But we'll talk about the first move now with and we sort of talk about his execution. I might go 2 times speed at one point. All you need to focus on is, so you got, this is, come on, maybe, don't know what that is. So, Brett, these pens aren't working today. Right, all you need to focus on is these two. One's in the black here, so you've got WTI on the right, and you've got Brent on the left. So all you need to focus on is where, so you can see his mouse in the black, where he's executing. He sort of then he trades both of these at the same time. And I'll explain why as we go through this. He's down, all right, he's down a little bit on the day, like 20k on the day. So, you'll see how he executes, and I think it's important important as well with this that to react as quick as possible, which he does. And as he starts to then go on side, we'll see just starts to get in a bit more, because at the moment it offered at the beginning, and you need to then be aware of what's next, what can happen next, and this is where it becomes like quite important of the anticipation of what's next. And you can see it comes out now. He only gets in very small to begin with, and as he starts to go on side, adds in up to 130, and then up to 200, and then you do get that wash back quite fast, and then he starts to do the normal execution of trying to get out quickly with little bits. So you'll see here, 60-90, you had 300 lots that come straight on the bid, where you can lean on this. You could possibly be buying more. I mean, the market's gone basically nearly 40 ticks from here. There's up to 150 lots here, then, making his P&L back on the day. And when we were talking, it was like, he didn't, as you'll see, the market actually blips after this. And you can only see he only has 12 lots to get out. And this is where I think it becomes much more difficult, and you'll see what he does in the Brent because of the WTI blip, starts buying the Brent off the blip because the Brent hasn't gone anywhere. And then you'll see how then he manoeuvre afterwards, and you'll see like the importance, like he didn't do like that normal strategy of putting bids or putting offers miles up the page, and therefore you're missing out on getting flipped out on, say, another 30 or 30. And then you can see he's trying to buy the Brent here for sort of basically the same reaction. So he starts to buy the Brent with a clip of 50 there, looking for that reaction. You're looking then for WTI to go back higher. As you can see now, he's trying to then look for it and to flick it up. And you feel like you've got that momentum at that point. And you don't seem to get the reaction straight away in this sort of Brent. And after this point where you've got that little like stops move, the move then becomes, as you saw on the chart, which becomes very grindy, and it's like, it's very hard to then to attack highs because they don't extend very far. And really what you've got to do is now manage this position, because the market's now come back 25 ticks from the 90s down to here. This market, Brent's not gone anywhere, it's probably gone down 5 ticks. So you're trying to evaluate the both like differences, and you're trying to then lean on this has got more to go, but it's come back 30 ticks now, the WTI. And this is where, even with this reaction, in my opinion, at this time, I didn't feel like I missed much. And this is now like we see, it just basically tries to manage this. And if I'll go 2 times because it goes on for a little while. And you'll see what he ends up doing is just trying to manage this position, because you've got, say, nearly 150 lots on across the board, across both of these, and he's going quite far now offside of the Brent, and you can see he's pretty much made nothing at this point. He's made like 10k at this point. And then he just tries, it becomes very difficult because you're just trying to get him flicked out on little pieces, and you're trying to manage the understanding, and just that typical normal execution of how he trades is, being aggressive and getting out very quickly. And you'll see he just pretty much manages it all the way up, and then tries to get in with, he tries to get in with sort of like 10s and 20s, just to try and build that position back up a little bit, because you can see the way it keeps coming back and going back up. And then also when you get these like little blips on the stops, I always notice that it takes time to then rotate back through, because there's no volume at all. You're just getting stops getting hit. So you're just getting multiple zeros up the page. And pretty much, sort of for the rest of it, he just manages the trade, and you're looking for that sort of move to continue, when you get in that sort of, that aggressive play. And I think, I don't know, the reaction because of it, maybe because there could be more to come. You haven't got a great direct answer from the end. And then also at this point again, you see this has come back a little bit. So this is where he started to buy, and that blip happened from down here. So the 85s and sort of the 60s area, again, the same thing. So not much size in the Brent anymore, only 20 and still 100 in the WTI. And this is where you're trying to then lean on, like this can, you know, the price differences, this is still taking highs, and, you know, can WTI get back up there? So at this point, you know, he's made like 30K so far. And it's all about managing this position. And then when it's very rotational, it's all about, I feel, being on side. And I think because being on side on these little deep pullbacks, and you've got some good size on, I think it really does help, because you know, you can understand the way it's trading, and, you know, when things like those offers come back, you're on side like he is on both. You know, back up to 124, and as you start to approach the high, this does build up much more momentum. As you can see, doubles up into here, real starts to get up here, you know, nearly 300 pretty much nearly in both. And you're looking for that here, so you got this 200 and 200 on the offer, and that's where you're getting like magneted like towards, and then you just little blips them and comes back. And I always find that very uncomfortable. You really want to see it take those and continue, which you don't really get to, which doesn't really happen. It becomes then very uncomfortable because you're just trying to hit through the side, and then you're looking for that extension. So pretty much this just happens most of the way up of this move. Obviously it carried on for about 30 minutes or so, which we've watched here from 35, I think 27, from 27 to 35. So this is not 8 minutes of it. And, you know, all he said he was like doing was sort of like managing I suppose the P&L and the aspect of what it's doing, and, you know, fixating on a number and just trying to manage that, rather than, you know, then dropping back the whole 20K and then going back down on the day. Now he's got out of quite, you know, let's say 2/3 of the position from the 300 now 100 between the both, and pretty much now trying to feed like this in, get out of little pieces and passively buy it to then just get flipped out on the way up. But basically this is what happens across, I'll stop it there, this is what happens across the board, and, you know, as we see, just reduces the position in the end until sort of that flow comes to an end, as we see. But I thought it was just an interesting way of, and it's having, I think, that understanding at the end of playing like rotations, where it's just going, you know, it's very easy where it just goes up. It's very easy. This is, no, good. Come on, green. Oh, I want to do it. Yeah, it's very easy when it just puts you on side straight away. And we watch my one, and I'll explain like in depth of how using rotations as well is very helpful. If we go back a little bit, what are we, 1805. So with mine, you've got the, so here, I'll quickly just describe this. I had my oil here. So you have Reza, Anamina, and I think it's Raj as well that comes in here. I pretty much have those certain names in here. So you can get them as fast as possible because they're your best link. I have my Reuters below that. As you'll see here, the open meeting postponed. So really, it's been out for some time, and the market is trying to offer, and it's failing. And I always, you know, when this and this is coming out, this is much more easier to lean on, but then it's the wires then really start to hit it, and then the squawks hit it, and that's where I execute. So pretty much you've got this, and I've got my mouse already hovering over the bid. And what I'll talk about is the rotations in this and how I kept on side. I felt like I should have gone much bigger, much faster, but I just got in with, like, I'm going to say half clips really, and if I was getting in with full clips, I would have, you know, maxed out on it. And I don't really even know why I was hitting really small on my like side buttons, but the way I traded I thought was good, etc. And we'll understand these rotations and what sort of pieces of price action you lean on at the time. So as you'll see, the mouse is over. This is already out. You've already tried to offer a couple times in those 2 minutes, and it doesn't really seem to, work. Amina's tweeted it, he's tweeted it, and then it comes out and hits the wires. So I'm in with 6 at this point. So I started buying 11s, 13s, I think 18s, and then you can start to go inside a bit more, and you'll see the momentum that comes in. And you'll see here, you just see the size come in, sort of those 23s. You'll see 23s, 24s, it just hit up sort of 30 lots. Yes, it's quite thin. You'll see there at the 60s, sort of 23s, 24s. It just kept seeming to be there, and the market could then never offer below. So you're like, okay, well, there's your little, very quick reference point. And then I'm looking then to buy back up through those sort of 28s here, which I missed and got flicked in only here. And then the big key point is you had this 170 lot at 35s. And the way I was thinking at this point is you can hit through that. So this was my idea. So as I've paused here, I was willing to try and hit through. Obviously, I'm not going to take that price out, but this is really real and willing. You're going to hit this market. Then once this goes, it should just carry on. And that was my thought. And this is where I should have been clipping much bigger size through here. And this was sort of like the downfall for me because I hit too small through this. So it trades into it, and I trade into the 35s as well, and then it trades in again, and I don't. I'm looking for then that to just go bid through and bid over the 35s. So now you've taken it. Now I'm up to 12. This is where you could be jumping in, like the 37s, 38s, and then you get that real push through. And then this is what I was all right with. And I do actually come out of a couple because it doesn't seem to accelerate very fast. Okay, now you're 10 ticks or so through, and I'm like, okay, well, this should just be accelerating through the high. I think also you got bank holiday involved as well, which doesn't necessarily help. You haven't got the real proper big-time players really pushing this. So I just got out, I put a little offer in to get out of something and left myself with 10. And then you do really start to get this push up, and then I'm looking literally for this to take the high, and then you're looking at this technical play like, oh, how far can this go? What is your sort of targets to sort of be thinking about? And my sort of good, real good strength is holding this, because you've got technical with the aspect and the fundamentals behind it, and then you're just getting this real acceleration through. And well, look how tight these little rotations are as well on the way up. They're so tight. I'm willing then to, obviously with that pullback, it didn't really work so much, but you have that, it shouldn't be coming back below those 55s. But the way I was looking at it is now I've covered half of the position, that I can now want to run a lot of this now, because you've just taken 50 ticks here. You're up 50 ticks at this point. Now let's run a good call. And then you just got this little churn in here, and I was like, well, if the rotations are tight, your risk is still down here. There's no reason as well that this meeting's been postponed. There's got to be some good amount of ticks to be taken out. And you're just looking at this rotation here. The volume's being built, and I'm like, well, as soon as it takes through the top of this, again, there should be another leg. I was looking, so obviously I think it was the previous day's high, which I think becomes in at the 89s, I believe. I think that's why I put an offer up there. And you're looking for these bids to just really push through all the sellers here and just clip them through. And I'm here, I'm just really wanting to hold a good core amount, and I'm just keeping an eye on how far these rotations are coming back. And you can obviously see here, which I did forget to mention, other people are tweeting and saying meeting's been postponed, meeting called off. There's no date for the next meeting, which I think is the key point, that yes, they meet every month, but that could be a whole month without any supply increase. And then here I accidentally got out of a full clip of 4, and then you just got this big wash back, and I felt okay, you took yesterday's high in the end, and it just couldn't really sustain. So in the end, I was pretty much just ended up, just no point me just holding holding a 1 lot there. So there's some real good like key points that I took from it by understanding the way it was like the rotations in how the market was and the size coming in, and it's just the fact of just, again, plenty of rewatching your ladders and me doing that. Again, you know, I should have really tried to push like 20 lots there. In the back of my mind, I was a little bit, and I was of course a little bit annoyed with myself, but then there's that trust and belief in your own, like the ability and how you believe the news has come across. You know, I don't really like to want to punt off what Twitter says, because it's very difficult, because sometimes you could do that all day long. And, you know, there was one a little while ago about, I think, the Iran stuff, and you're like, well, that's quite a significant piece of like wording, and nothing ever come across. But yeah, so these improvements that I could be making was the highlights on the Reuters, you know, thinking of different ways to get numbers across, because you see it across all the banks. The language would just change. They would just change it, or the Reuters would like change it. Instead of doing 500,000, they do 0.5 or 0.4, or etc. Understanding the clear narrative, you know, what is that next outcome? What changes very quickly, adapting the fast, and how also the way how sensitive the market is, where the market's positioned. They're two massively key points. Will add into bigger moves. Specific on your trade plans and the conviction, what really matters. More aggressive, faster clips. Like I hit 2 clips quite fast. I could have done 2 big clips of like 10, and you would have got fantastic prices. That's where leaning on what you've already seen on the Twitter, then hearing it, and you're seeing everybody jump in, is the best way. The 200 lot, again, I could have hit more size through that. I could have put most of my size on through there. Technical setup as well was great. I think that helps you hold that move, that sort of like little breakout type trade. That's, again, understand how far the market can go, where your targets are. Having been clear on that technical and understanding, you can real hold your trades. Clear expectation on that market reaction, and again, how far the move is, you know, how big can the move be? How game changing is it? Can I lean on the Twitter more? You have already got the correct answers. You can go bigger, faster when the news wires hit and everybody's jumping in, and you can get the best prices with the best amount of size and the best risk reward. But yeah, that's it from me today.
If you find this video interesting, if you want to go deep into the AXIA training method and how our trading team of 7-figure traders develop setups and strategies, and how they learn to build the most profitable trades across all market environments, then join me in this workshop. Now, in this workshop, you're going to learn 3 powerful steps we use to train all our traders on both our London and our Poland trading desks to help build incredible levels of consistency. How to predictably understand which setups work and which don't. You're going to learn our 2 main strategies for how we perfect our trade timing before we enter every single trade. You're going to learn the VEL concept, which is our one and only technique we use to leverage our largest trades. You'll also learn how to avoid trading setups that don't work, how to avoid those large losses, and our main method we use to identify them that saves our traders significant amounts of capital. Finally, you will learn how our traders use the power of network learning to find market patterns quicker than ever before, so you shortcut that learning curve. In the workshop, we want to program your awareness of elite performance, to program your ability to choose the right setups, and program your ability to be a consistent trader. So the trades that you execute become more simple and clearer. And I can tell you this, you'll never see the markets the same again. You'll never look at the markets with a narrow view of getting lost in all the noise and confusion. You'll take your first step towards a deep edge market awareness. I cannot wait for you to join me in this workshop. And I think you're in for a massive paradigm shift in your understanding of how to develop as a trader. So join me by clicking on the top right-hand corner of the screen and sign up for this powerful training workshop, or visit elitetraderworkshop.com.